Hello, everybody. TGIF. How's everyone doing today? Hello, Glenn, Tom, Windsor. Tico, how are you? Yasser, how are you? Team, how are you? So people are asking, they're curious what I look like after a grueling, prosperous, enjoyable week in face. So David, to answer your question, this is what I look like after a grueling week in face, hanging out with traders and the best team on the net. Not bad, huh? For an old guy. Okay. I have a great guest for everyone today, David Cooper. If you're a GAN enthusiast, you're going to love it. Nick's going to drop in a little bit. So enough of me. Let's get to what we're all here for. And that's pips. Okay, so this was a pattern in play it was a Blaker by Blake Morrow, the short side of the DAX. This is not updated, okay? So our subscribers should be having a great week, even just with this trade. DAX is down 150 today. And when you think about it, if you just had a one lot on the DAX from where Blake recommended entries on it, here's our other pattern in plays that are working. So the entry area was 12,590, 12,610. Here's our targets. Here was a stop. That if you just did a one lot, you could pay for a yearly subscription multiple times over. Give me a Y if you understand that. That's just a one lot short DAX, which is, this is what it's doing now, breaking the new lows. Short from in here, pattern in play. And, you know, this is something that Blake didn't discuss during the week in phase. So, you know, people that are here during our webinar, I'm not sure if you were aware of the DAX, and what a great market selection. He sold the relative weakness. The DAX is leading the way down, much weaker than the S&Ps. Give me a Y if you see that. S&Ps are, you know, right up against the highs. They're going to be the last one to roll over. And I want to go to the crosses. So yesterday, when the euro was exploding, after Draghi, I said I thought it was a gift. Sales around 130. Earlier in the week, we didn't even think it would get up this far, right, Steve? So you're probably saying now that we're down at 54, that you're a little late. It's at 60. But here's the trade-off. Okay, I was selling it while it was going up. So if you sell it now, at least you have some evidence and a frame of reference for risk. There's more evidence now. There was no evidence when I was doing it. I was just trading a fib retracement. But now you've had a couple of candles that are negative, that are giving you at least some technical confirmation that it's possible that this was a B, lower high, not by much, and that we could be headed up for C. Also, earlier in the week, Rudy Marin, are you in the house? Rudy had a weekly chart he showed for a top in Aussie yen, which, you know, a lot of us thought was high risk. Coach. But I want to congratulate Rudy.
Coach, good morning.
Oh, hi, Steve. How are you, buddy?
That was a good trade. I feel stupid for not taking it yesterday because I actually wanted to, but I was so busy that I was monitoring it and I never took it. But we still, and today's candle in combination with the last two is an evening star formation, so that's a great rollover, a great one. But
on the euro yen you're speaking, right?
On the Aussie yen. But
Aussie yen. Oh, okay.
Yeah, but I'm going to show something on the chart later when we visit it, because we're not out of the woods yet. Okay, just remind me to do so afterwards.
Okay, that's pretty much, I still think that the end crosses are sales. So, you could pick your poison. I mean, Guppy hasn't done anything right. I thought we might, try and hold in here. Maybe we still do.
I'm out of
But
Guppy, by the way. I tweeted it
okay.
yesterday. I exited the position almost at the low of the day yesterday because, as I remind you, I had all along a target there at 144.70.
Yeah, that's right.
So
That was a great trade, Steve.
yeah, so
Nice work.
I didn't like the fact. I mean, you know what I still don't like about the Guppy? Today is the 5th consecutive day that it's moving lower, and for 5 consecutive days that it has been moving lower, I can't say that I'm seeing the acceleration I would have liked. You know what I mean? That
Yeah,
doesn't mean that
right.
it's
It's
not.
just,
Yeah,
yeah, it's grinding lower, which kind of makes
yeah.
you a little queasy. Yeah,
Yes,
I
yes,
get it.
exactly. So I booked almost 200 pips, and I'm quite happy about it. Now, if it ends up moving lower, fine. One of the first things you learn is to have no regrets. I mean, it was still a winning trade. I risked, I risked, I guess, around that much because I remind you I didn't have a stop loss for it, but roughly I was willing to see that kind of a move higher, roughly. So I think it's an okay trade, and we see what happens from here.
Hey guys.
Okay. Hey,
Hey, Mike,
Hey.
welcome to the company.
Hey, my nephew and his friend are actually they're coming in here just to hang out, learn a little bit more about currencies today. So I'm kind of in and out here. Had to just let them in, and thanks for covering the DAX.
pip. Yeah, nice pip call on that, Blake.
Thanks.
Really
Do you
nice.
guys mind if I take the charts for just a few?
No,
As
go,
long as you
buddy.
want.
Okay.
You're the CEO of Face. You can do whatever you want.
Well, hey, I'm going to come back to the peso here in a second. So let's talk about, and I want to talk about that one actually. So let's go over to the German DAX, and yeah, if you're a subscriber, we came out of an ascending wedge. This was, it's been 2 weeks. I want to say 20 or the 6th. Yeah. No, wait.
Yeah.
27th.
27th of June. So it's been three.
Yeah, and Blake, since you're showing that, a little tip: people in their settings can change the way that dates are being displayed.
Oh,
So
yeah. Okay.
the
And
American format or whatever, so you don't get confused.
thank you very much. Okay, so right where this highlight is, and we came out of the ascending wedge, and we've been covering the whole time like this is a big resistance zone, and it rejected there. And the thing about the DAX is the DAX is really interesting because if you look at it on a longer term basis, we hit what I think is channel resistance. You can see it up here on a monthly basis. So, and now with the euro as strong as it is going to weigh on the German DAX, which is export heavy, and it's weighing on sentiment, is what it is doing. So the DAX, I know I have a target of, and again, this is for subscribers here, but you guys can see it. We're several weeks into the trade. It's 12,000, but I really, whoops, didn't mean to do that. I really think it could, whoops.
Take something here.
I really think it can go a lot lower than that. I mean, 12,000 is there. I mean, we could go to 11,800 is the 38% retracement. It could go further. So that's something to just keep in mind. I don't think that it's going to be limited to 12,000, but for a trade, that's entirely possible. The other thing that we just had Canadian data come out, and let me go over to the dollar Canadian. So Canadian data came out, and it was the retail sales were a little stronger than expected. Inflation is still pretty weak, so the Canadian came down. It got hit, and it came right to trend line what I think is trendline resistance right here at 126.10 or whatever. But I think we got to keep an eye on it, because if we break above that 126 level, especially considering how divergent the relative strength is, and I know I've been pointing this out on, and we're extremely oversold, we could see a snapback rally. I don't know if it's going to happen today. I think a lot of that has to do with how do stocks react at the open. If you guys notice, like earnings last night, Microsoft beat. It was up 2% yesterday in the post-market. Pre-market today, it's down. I mean, it's down right at this moment, so it's trading lower. And with the DAX breaking lower, the S&Ps showing some weakness here. Here's the S&Ps. They're showing some weakness here. If we start trading lower, you might get a risk-off type of environment where the Canadian tends to do worse in a risk-off environment, as does like the Aussie and the Kiwi and the peso. And I wanted to talk about the peso because the peso is near a big fib level, and it's been and the thing about the peso is it's been trading pretty heavy. We just had Mexican employment data come out. So the Mexican employment, it was unemployment rate. It actually is at 3.3%. I mean, that's pretty good. I mean, unemployment at 3.3%. I mean, get the hell out of here. That's a good number. But what we saw is the Mexican peso actually weaken following that number. Which we saw the dollar Mexican peso go up. So I'm actually watching and keeping a very close eye on this peso, because we might get a higher low here, and if we do, we could come up and see these recent highs. It's possible, especially with
Blake. Sorry to interrupt. As an economist, with a 6.3% inflation rate, Mexico, it's not so weird. I mean, the low unemployment. Actually, it's a reverse of how I explained it. But I mean, if they actually try to tame and manage to tame the inflation rate, unemployment will probably
go down, right? And they've been
will go up actually. Because
yeah, that's what I meant. I mean, that's what I meant. Employment would get worse, is what I meant.
Yes, correct.
And one of the things that Mexico has been attempting to do is they've been raising rates. They've been one of the only central banks that have been actively raising rates. I don't have the data right in front of me, but they've been raising rates pretty aggressively to try to strengthen the peso, because of the demolition we've seen in the peso over the course of the last couple of years, and so they have been raising rates, and so maybe it does start to clamp down on inflation a little bit, and if it does, then maybe their employment gets a little weaker moving forward. I don't know, but right now, but I don't know.
I look at this, and I don't know about, like you say, you don't know if it's going to turn today or next week or when it's going to get through that level. But a move back to your moving average up around 1950 doesn't look, like anything that is impossible to happen. That would probably just be like about 38% back from the highs.
Sure, and we're in a situation where like I said, if we go and see a little risk aversion, which the S&P is trading heavy, Nasdaq's trading heavy, DAX is trading heavy, the Nikkei's looks like here. We don't cover this on ForexAnalytix. I'll show you the Nikkei.
Gold getting through resistance.
Yeah, gold's through the 50% retracement. Right? Yeah, you got here's the Nikkei. You want to talk about a chart that's like on this is a scary chart.
That's a Wile E. Coyote chart with Wiley on the ledge.
Yeah, I mean this one can get pretty gnarly, and if we start breaking lower in the Nikkei here, I mean, think about what that does to like the yen, which is the dollar yen is below the 200-day moving average, by the way. And think about what like all the other yen pairs do. We have these yen pairs. And I'll cover just a couple of them. Like here's the Canadian yen. It looks just like the Nikkei, right? I mean, the Canadian yen looks extremely vulnerable after this big of a rise. You know, relative strength is rolling over. New Zealand yen up against resistance. Aussie yen. You know, could we end up posting a false breakout? It's entirely possible. You know, so these yen pairs look vulnerable, and they look like they could roll over. And if they do, you know, that would be in conjunction with a, you know, a weakening, you know, Nikkei. So and stock market. So those are just a couple of things that that I'm really looking at today. Obviously, the euro is really strong. You know, a lot of people are wondering, you know, hey, should I fade the euro here? I think it's very dangerous. You know, the euro dollar is extremely strong. You know, it's interesting. Mario Draghi tried to throw everything and the kitchen sink at, you know, at the market as far as, hey, we're not going to be raising rates, or we're not, you know, we're not going to talk about tapering. We're not, you know, he tried to do everything, and even sent some of his official, you know, some of his people to put out, you know, ECB commentary, even after the press conference, and the market just ignored it. And you know, you look at the euro dollar, we start breaking, well, okay, so 118.70 is like huge, and the reason why it's huge, I have to take you out to a weekly chart. That is previous support over here from, you know, back in 2010. You know, we start breaking above those levels. I mean, we're 117 and a quarter is already big, but then we start cracking above 118 and 118.70. Man, this euro could really start to power higher. And you know, I know we're really overbought, and I just think you have to be buying on dips. This is the dollar looks vulnerable. And if speaking of the dollar, let's go over to the dollar index here. This is a scary chart here if you're long the dollar, because if you're long the dollar, this is channel support right here, and we're trading right at it. You know, right now we're just slightly below it. I mean, the dollar looks like we could really break down, and keep in mind, a lot of people were very bullish the dollar going into this election at the beginning of the year, and they have found themselves wrong-footed. So you got to imagine those longer-term dollar bulls. Where exactly do they start pulling the plug on their long trades? You know, it's like I said, I think it looks a little dangerous at this stage in the game. And I know it's natural to look at the dollar right now and say, okay, we're at support. I want to go ahead and buy it down here. I understand that. I get it. But at the same time, there's a lot of momentum behind this dollar weakness or euro strength at the moment, which could end up spilling over into the into the dollar index. So the dollar does not look healthy, and it looks, you know, entirely possible that the dollar could really start to see a much bigger breakdown than we have right now. Now, does that mean it's the dollar all across the board? Not necessarily. We could have the dollar yen really, you know, buckle, like let's say the Nikkei falls and the dollar yen, you know, drops through like 110, and the euro dollar spikes through 118. Does that mean that the Aussie dollar is going to follow suit, the Kiwi dollar is going to follow suit, the pound dollar is going to follow suit? Not necessarily, because it could end up being dollar as a basket moving lower, but more of the cross rates being affected. So I'm not 100% in the camp that, oh, you know, the dollar is going to break down, that we're going to see, you know, the pound rally to 134 while the euro goes to 114. You know, I think the cable's got a lot of Brexit issues it's working with. You know, you get a little risk off, and these commodity currencies might not act as well. So you might have to be more dollar specific or currency pair specific on a dollar index breakdown versus just selling a basket of dollar currencies. You know, or buying a basket of majors against the dollar. I don't know if that's necessarily the right trade.
That's great advice, Blake, because, you know, I use a metaphor in American Idol. All these kids may have great voices, but their most important decision is their song choice. And for us in our business, it's trade selection. So you could be right about direction of the dollar and choose the wrong instrument. So
exactly, and I think the easy money's been made on dollar weakness. You know, with this dollar index, you go, okay, well, you know, the dollar index has fallen, and it's fallen so aggressively. You know, and it's been, in my opinion, easy money. But if we push down here to like 92 from 94, it may not all be a basket of dollars. It could be, you know, it could be very specific. I mean, you could get long on the Aussie and get no bang for your buck, or get long the Kiwi and get no bang for your buck. I mean, you buy the Kiwi and dollar index drops down to 92 and the thing's only trading at 75. But you have the euro dollar at the same time trading at 119. That means that the euro Kiwi was a much better trade. Yeah.
I don't know if you agree, but I don't think there is any other person in the world that can correlate the financial markets with American Idol and make it sound like
like that. Oh my God, that made sense.
Well, you know, I fancy myself a singer.
Yes, you do, and a good one at that. So anyway,
retired.
That is really good. Hey, I'm sorry to be out of here early, but I do have visitors here in the office. So, Steve, I'm going to let you take over.
First of all, Blake, you don't have to worry about it at all, because today we have Grega here with us.
Wow.
And, yeah. And from what I know, Nick is also going to be with us a little bit later. So today we'll have the whole group.
What a great show. Yeah, that's awesome. And I know Stelios is lingering in the background. So, all right. Well, enjoy, you guys. Enjoy the rest of the webinar. And thank you very much, Steve. Have a great weekend, TGIF, everybody.
You too, Blake.
And Steve, before you start, this is a little unconventional. I may regret saying this, but I tell you what, guys, click the $1 trial for 10 days. And if you don't like it, honestly, after 10 days, I will mail you a $1 bill, not out of the company, but out of my pocket. Okay? So you try it for 10 days, and if you're sincere and you got nothing, you said, "Oh, what a ripoff that was for $1." I'm going to mail you a $1 bill. The stamp will cost as much as the refund. Okay, go ahead, Steve.
Okay.
Is that okay that I offered that?
Absolutely.
Okay.
I'm sure that you will get no request for a refund.
I don't know. All right, buddy, go ahead.
Grega, you want me to pass you the screen? I know that your time is limited, so do you want to go ahead and? Yes. Okay, perfect. So I'm passing you the presenter.
We got a couple of things here before Grega. Some nice comments. Rudy Marin's here watching us for the first time, and you know, I'd like to know what Grega thinks about the yen. I know he's longer term constructive, but someone's saying, just like you, Steve, the yen has reached the head and shoulders target to the downside. Hi, Grega.
That is very true, and we also need to see how it's going to close the day, because yes, at the moment it's showing weakness, and it's below the zone I was looking at. It's currently testing roughly the 50% fib, but we also need to know to see how it's going to close. But I'm sure that Grega can begin by there, and I know that Greg and I are seeing the markets more or less the same way. So let's leave him show us what he sees.
Actually, what I see on the dollar yen is that it's now approaching to 61.8%, and it's really interesting because current new lows were posted exactly at the same time when DAX broke, as you know, sharply to the downside today. So it occurs that the DAX is making a new 5-wave decline in wave C. So it may take a while before this dollar yen can again turn to the upside, because firstly, I think that stocks could correct slightly lower, and if we consider that US stocks were higher, European stocks did not follow through, okay, while dollar yen was down. So if stocks will now make a deeper pullback, which I believe it will happen sooner or later on US stocks, then dollar yen would probably stay in some kind of a consolidation. So I'm not really sure that we are in wave 2. So of this wave count actually. So I'm actually having idea of discount of a triangle, which means that we could stay easily sideways here for another couple of months. Okay.
What would turn you long-term bearish on the yen, Grega? Would it be closing under 109?
Long-term bearish, probably we should go, or we should retrace all of this very strong impulsive reaction that occurred at the end of 2016. Okay, so because
so we have to get down all the way down to those lows for maybe bear case too.
Just make an overlap with this wave 2. Okay, this could be enough. The fact is that this was a very strong impulsive reaction, and notice that actually since then we are just chopping around. So to me, it just says that we should look in the direction of a previous impulse, and this was to the upside. So I'm looking this as a wave 4. Maybe this could also be labeled as a wave B of some different wave count, but still a correction that should take us higher. Okay, but for the short term, as I said, stocks could make a pullback. And firstly, if we take a look on DAX, here you can see that I was expecting a wave B to reach 61.8% retracement, but clearly we broke down earlier. So it looks like that we are already falling within wave C. Okay, so it occurs that there is more downside to go. If we stay and close bearish today below previous lows, I think that there will be more weakness for Monday, Tuesday sessions, and this could bring dollar yen even lower. Okay, so Japanese yen could find some.
Grega, yes. That's not my main thesis, but I'm going to ask the question: what would make you believe that this, instead of a wave C, is a wave 3 of an actual reversal from the highs?
What really should happen is actually I use this simple channel technique. Okay, it's actually taken from Jeffrey Kennedy from the Daily Webinar International. He always uses channels, and he says this, that if you see a correction, you would expect wave C to bottom at the lower side of this parallel trend line, okay, or this channel. So this lower trend line should hold. If you see a decisive break below this trend line, okay,
then it's a wave 3.
Yes, then this is already characteristics that you are in a third wave rather in a wave C, because you will have sharper decline, you will have the longer.
It's exactly what we never saw in the Nasdaq, for example, that I was telling everybody here, since early last week, that we be very careful, because the Nasdaq gave us a perfect ABC, and this is, by any means, this is not an impulsive move lower, and we should move higher, because it was exactly that price action that you're describing, the one that you're expecting for the DAX, from what I understand.
Yes, actually, if we connect this and draw this channel here, Nasdaq, let me remove the old ones. You can see that clearly this third leg of decline, okay, found a support at the lower trend line. And if you remember, we were looking for this reversal to the upside to happen, and clearly it did play out very nicely.
Since we're talking about the Nasdaq, I actually shorted live on the webinar yesterday 5,930, because we had 9 consecutive days, and yesterday we made them 10. Can you show us a short-term count?
Yes, actually you have it here. I think that we will see a wave 4 pullback, a new one, okay, and it could retrace back to this small gap. I'm not sure if this is the real gap or it's just my platform, but the idea is that I would be looking for retracement back to 58.60 and maybe down to this wave 4 termination point 58.87. Okay, so if I update this really quickly, clearly this is now broken trend line. Okay, so it tells me that we are in a correction of a higher degree, which means that we could see slightly more weakness and then turn to the upside. So
58.24, to be honest, is my first target. So it's roughly there.
That was a nice topic, Steve.
Thank you, Dale.
You did it without Grega.
I send them charts on Skype.
Yes,
Okay.
all the time. I'm like, Greg, tell me where to sort.
You know, Steve fixed Greg's brain so much that Greg gets a concussion.
No, to be honest, you know something. I'm a lover, but an amateur in Elliott waves. For me, it's the secondary analysis I use. So now, kidding aside, it's fun. On occasion, I do ask Greg for his charts because I'm not saying that because we're working together. Greg is one of the best technicians I've seen in what he does.
Yeah, Greg, is it true it's only once in a while? Come on.
No, Greg is a real Elliott wave talent, honestly.
Oh, I know, but I mean, I'm questioning that it's only once in a while. You make it sound like it's rarely. It's daily, isn't it, Greg? Come on. Well, you get to see all this stuff anyway. So does everyone else who's a member.
What really, Steve, you should watch as well is that sometimes when you have these sharp lags, sharp recovery, pullbacks of fourth waves can be very similar to second waves. Okay, so this has clearly occurred here. If you pay attention to blue levels, you can see that blue wave 4 was equal to blue wave 2. Okay, and I would expect something similar maybe for wave 4. Wave 4 could be very similar in distance compared to wave 2 of the same degree. Okay,
so that's instructional. Greg is teaching Elliott now. So yeah, so write that down, guys.
There are a lot of different methods how to identify wave 4. So you use 38.2%, but if wave 3 is very extended like here, then 38.2% will not play out well because it will be much, much deeper. So in such case, you should use different techniques like this projection. So you take distance of wave 2 and put it at the top of wave 3, and then you look where wave 4 could travel. Okay, so clearly this can bring us, as I said, back to these levels. Okay, in let's say maybe Monday, Tuesday, and then I would watch out for another final leg to the
upside. A turnaround Tuesday and another high.
Yes, but of course we'll see what will happen today. I just think that we will slow down a little bit. It's Friday, still in the middle of summer, so I'm not sure.
In the larger count, Greg, that new high you're expecting would be the end of a wave 3?
Just a second. This is
yes, the end of a wave 3, huh?
Actually, this would end of a wave 5 of wave 3 of a higher degree.
Wave 3, yeah.
Yes.
So a deeper correction then.
Yes, exactly. We have quite extended. You can actually see that after each of what was the previous leg was 40. If we compare this leg, okay, you can see actually that then we got a pullback down into wave 4, and then another similar leg and a pullback. Okay, so you can clearly see. Just a second. That after same or similar moves, we can expect another pullback. Okay, there's always a pause after such an extended move, so, or I should say, such an impulsive reaction. So definitely, I would expect a correction. Let's say maybe this correction could go underway next week. Okay. What I really want to talk about is when I joined the webinar, it was on Monday, Tuesday. We also talked about Bitcoin and Ethereum. We said that we could see a continuation to the upside because we have seen a three-wave decline. As I know, Nick made a nice call on bullish PIP here for Bitcoin yesterday, and it played out pretty well. But I think that there is room for more upside. There's clearly a very strong reaction to the upside from the previous wave 4 supports. We've broken this upper trend line decisively. Clearly, this should be a third wave, and now just a small pause within an ongoing 5-wave rally. And here, if I give you a quick update on this short-term outlook, it looks like that this was a first 5-wave rise, then you've got an ABC, and now
another 5-wave.
Another waves 1, 2, 3, 4, 5.
Now another correction, as it seems. Yeah. The question is, this new push to all-time highs once again, what is it in comparison to the larger count? I mean, where would that take us, having to do with, you know, the larger count? Is that terminal?
Just let me take a look. I think that there will be now some mania cycle again. Maybe this current leg will be much sharper to the first leg, okay, but sharper, but it may not last so long, okay? So
your wife
once
is calling, by the way, or your brother or something.
Excuse me?
Your brother is calling, or your wife?
Yes, my brother is calling me. He's late
okay.
for job. He should help me with the charts, and he's now late, what, for 30 minutes?
Kids, what can you do? Kids.
Yes. So what I would be looking here is, I connected this channel, as you can see. So I would be looking for a test of the upper parallel trend line, and then would expect much sharper decline. Clearly, this was not a collapse yet, which I suspect it may happen on cryptocurrencies. You can see that, as you know, Steve, when collapse comes, you will see a very, very aggressive decline, probably 50% fall in a day or two. Okay, but clearly this was very slow pullback to the downside. Okay, so what I think is that we are still not there yet for a collapse, but once we breach a new high, probably crowd will get even more and more bullish, especially new traders who want to get involved into the market.
And those are the guys that are going to lose everything they have.
Yes, and those want to get in right now, right here, but which is still fine for short-term trades maybe, but they're so unexperienced, they don't have any plan, they don't know where to go in, where to go out. They just want to buy and leave it, and without plan, that's usually will not play out well.
So do you have any future projections, Grega, after we peak in Bitcoin to where the collapse would take this instrument?
The collapse would, normally it should take us back to this wave 4 supports.
Okay, so where we were 5 days ago. Okay.
Yes, during the week.
Yeah, but imagine that might happen from 3,500, from what he says, Dale, which means that people that will have entered there will already be depressed.
Yeah, rinse them out. So wash, rinse, repeat. Wash, rinse, repeat.
Yeah. Now that we're talking about cryptocurrencies, I know that you didn't have a very clear view on the metals because you had contradicting counts. Has your view changed at all? Have you
actually
had a better, I don't know, understanding of how these markets are working at the moment?
Just a second. Actually, I said that silver is going to be bullish for minimum third wave rise, and I still see room for more upside here, back to the area of a former wave 4 here, around $17 maybe. It's also distance where wave C or wave 3 would be equal to first leg. So I stay here bullish. And what I like about gold from this week is that actually we have 5 waves up.
5 waves up, you're right. You're absolutely right.
We are now, but traders should not fall into this too quickly. We are now in 5th wave. As you know, we expect a 3-wave retracement. We are also at these previous swing highs of wave 4. So I see some resistance area here that could make some retracement early next week. And ideally, we will get this wave 2 pullback, and which I will.
My initial target for a recovery was 1257. I see that is within the zone you have drawn there. So yes. I completely agree with you. What about the dollar? Because you know a lot of people are currently wondering when the hell is the dollar going to turn around, at least for some kind of a corrective move, because it trades like a piece of junk at the moment.
Based on this week's price action, I think that we will see more upside. If you remember, we were tracking actually 2 counts, right? We were considering.
I didn't ask about the Euro USD, but show it. I asked about the DXY actually, but yes, sure, show it.
I will also show the dollar index, no problem. Actually, if you remember, I said that either we are in a flat or a triangle, and if I recall correctly, you agreed and you said that probably we are in a flat correction. Okay. And so far it moved very nicely to the upside, and actually momentum for the last few days is very strong. It takes us above this previous swing high. So if we close above these levels today, I think that there will be more upside to come. And since we are trading in a wave C of a flat, we need 5 waves up. Okay. But I would expect a correction after this wave A swing high is broken, because here a lot of traders are
going to be trapped long.
Yes, they will fall into a trap, because they will say now euro dollar is bull now for real because of this breakout, but they will get a wave 4, prices will fall, they will be stopped out, or because of emotions they will close it, and then we will see another push up into wave 5. So I think that in the near term, there is...
So knowing that 57% of the DXY is Euro USD, from what I understand, you don't see any real big relief coming soon in the DXY.
No, just a correction.
Just a correction, okay.
Yeah, he shows it taking out the 92 here. Okay.
Yes, yeah. Same. Yeah. The idea is the same. That was wave A, that is wave B. We are now in a 5-wave fall. Probably we will spike this lows out of a wave A, and then
trapped everybody to be short and happy.
Yeah, so the dollar will be the world's coming to the end in the dollar around 91 or so.
Yeah, we're going to see the magazine title.
Then we go to 107. Yeah. Then we go to 107, right? Okay.
Yes, exactly.
All right.
So I'm looking for the 91.70 around there to be a support, which it may be found by the end of the year. Okay.
Okay.
Because
very interesting.
It's a long process. There's no tops and bottoms and the reversals. It's still a correction. It can take some time before we can truly say that we are headed higher into wave 5.
And if we get that move, Greg, up towards 107, to me it would be like a third drive. Does it look like it could probably end in an ending diagonal up there at your? You won't know till we're there.
Yes, we don't know that. That's definitely too soon to say.
Okay.
But ending diagonal also. But I hope it will not be, because ending diagonals are very slow, very choppy, and they take a lot of time to unfold. If fifth wave here would be an ending diagonal, then this stop would be in process of making for another, maybe even 2 years. So you definitely don't want that.
Wow, I love it. Hello, everyone.
Hey,
hi, Nick.
Welcome to the party, Nick.
I really do think more dollar weakness is the pain trade. And if you take a look at what the dollar did under Nixon, it gives us a clue of what's coming.
So you believe that Trump will have the end that Nixon had?
No, I don't. But you know, the things that the market were hoping for, like tax cuts, he needs to do the healthcare to do it, and it just doesn't look like it's going to happen, does it? So, like, whatever you think of him politically, I don't think it's going to happen. So.
Okay.
I better move to Canada.
No, but like, you know, other things will do well.
Yeah. Yeah, I can't even remember that far back. I think I was in college.
I know, I had to go look at a chart, but yeah, didn't do very well under Nixon either.
Oh, I know. I know you weren't even born yet. So great call on crypto queen. You're the crypto queen now, Nick.
Oh my gosh, that head and shoulders. It was such a rush yesterday getting that pip out at ForexAnalytix, because I really thought, you know when you see a head and shoulders upside down or right way up, you really like them to have symmetry. You know, you like the shoulders to be approximately equal, and so that one, I looked at it and I was like, oh, we've got another 6 hours, and then all of a sudden my alarm was going off, so it was breaking out, and it was such a rush to get it out. That was funny. Yeah, I got lucky. I got lucky.
Nick,
So,
there is a friend here that shared an interesting chart. I know that you might actually want to have a look at
okay.
it as well. R Marine is the name I see here. He says, to be exact, just a quick share regarding gold and silver. Not sure where they are headed, but gold-silver ratio looks topish. Gold rejected from resistance when silver flash crashed. Best strategies seem to be long silver, short gold in coming months, or short gold if bearish views, long silver if bullish views. Cheers. And this is a monthly chart that he's sharing with us.
Yeah, I would definitely, when I measured, like when these gold and silver turned like 2 weeks ago, when I measured the upside, I had about to where my targets were, I had like 22% to the silver target and only about half that to the gold target. So I would completely agree with him. And not only that, but in your gold silver ratio, we've had like one leg lower. I think we're looking at another leg lower, like an ABC in that chart. So yeah, or a zigzag as Gregor would call it. So
okay.
yeah, Greg has got really good stuff going on. Well done. I liked it.
Yes, Greg is great. What about you, Nick? What would you like to share with us? Do you want me to give you the screen to begin with?
I was just going to say, I completely agree with Gregor on the dollar, and for completely different, not completely different reasons, but for different reasons. Just because I look at like the 23.6 Fibonacci retracement on a big time frame as like my.
Let me give you the screen so people,
Hold on, I'm not ready. My screens are not ready. But if you wouldn't mind leaving that up for a minute, that would be great.
Let me show.
I'll just get up the dollar index for you.
Yeah, definitely.
So yeah, as I was saying, okay. I'm just getting it mine now. So yeah, so we broke a big 23.6. If I'll take the screen now, sorry, I've got it up ready.
I'm giving it to you.
I wasn't sure what we're going to do.
There you go. The screen's yours.
Thank you. Okay, so I'm just going to clean a few things up here, and then I'll show you what I was looking at. So this blue Fibonacci, I'll take them off as
you're
well.
showing a different screen, as it seems, Nicola. We can see your Skype.
Oh, okay. But I'll hide it. I don't know how to take it back. Stop. Okay, hold on. Let's try again. Can you see anything now?
Some black background.
Okay. 1 to 3.
With a Fibonacci hippocampus.
Okay, have we got that one?
Yes.
Okay, sorry.
No problem.
Okay. So 2 weeks ago in the dollar, so I look at the 23.6 as the first fib level that I want to see as to confirm a reversal. And so when we broke the 23.6 of this big rally from the 2011 low 2 weeks ago in the dollar index, that for me was the signal that we were going lower. And I'm just going to take these moving averages off because they're not helping us. Not only that, but I very often put it on for the complete movement. So from the low lows, so I'll put a fib swing on from here to here. So I actually had 2 Fibonacci levels that I was looking at. So one was here at 96 even, and then the other one was from this low here at 96.51. And so I said, if those 2 levels break, if that 96 even breaks, for me, that's a trend change, and we're going to go to at least, and that works for me like all the time. And so that broke 2 weeks. Yeah. So that broke like 2 weeks ago in this, and then we have the breakdown in the Canadian dollar, which for me is like the canary. It's always the first one. And then if I go to an Aussie dollar on the monthly, the Aussie dollar has done exactly the same thing. I'm just going to show you my Aussie dollar on a monthly. And I'll clean it up. Sorry, I should have got stuff ready.
Don't.
So here you can see the 23.6 Fibonacci retrace from these highs in 2011 was the high at 76.33 back in 2016. So this 23.6 fib retracement on the monthly as well. So that went in Aussie dollar a week ago. So the CAD broke down, the dollar index broke down 2 weeks ago. So that says to me now that the big 23.6 fibs we're looking at in euro dollar. So let's go to euro dollar and tidy this one up as well. Sorry,
yeah,
I'm just trying to
we
clean
tested
it up.
it.
Yeah, so well, when we tested it back in 2015, it was a perfect test because it was slightly higher because that was the low. Now we've made a new low, so that level is slightly lower. It's 116.85. I think given that in every other market that big fib level has broken, that I think it's pretty sure even if we bounce off it first time in
It
euro
will
dollar,
happen here as well.
I think it will happen. And yeah, and then in the pound we've got that level too. So the pound is slightly lower actually because it's fallen so far, and it's not from the 2011 high or the 28 high. It's actually from this high. We're at the 23.6 from this high in the pound, so a much lower one. Sorry, it's from the 2014 high instead of from the 2007 high, and that's where we've stalled at as well in the pound. So I'm just going to show you on a weekly. So these are big, for me, big fib levels, and so I think that because the commodity currencies have gone through, that I think that that's what we're going to see happen in the pound and the euro and the Swiss. Probably not the Swiss National Bank when it's to happen. But in the dollar Swiss, we've got that double top, and
the Swiss
that we're heading into.
The
Yeah,
Swiss is slightly supported because of the euro Swiss. Actually, I mean, it keeps it, a little bit better. Yeah.
Yes, it does. Yeah. So this is the big 236 in the pound as well. So it's a big deal. But let's see what happens. I think because the others are broken, that there is a good chance that it does.
Nick, you get paid in dollars. If you could tell your employer to pay you in any currency as of today, what would it be? Aussie, Euro, cable? Which one would you prefer payment in?
Bitcoin.
Oh,
you didn't expect that answer, Dale.
I
didn't.
I didn't see that coming.
Good one,
I think perhaps an emerging market currency. I don't know.
Like the Greek drachma, for example.
Oh, we're going to have that.
I don't know about that one. It's not around anymore. But
definitely, you never know.
For me, probably the Aussie dollar or the Canadian dollar.
Okay, cool.
One of the commodity currencies. Just because, weak dollar favors commodities.
Blake, did you hear that? Go ahead.
Weak dollar favors commodities, so the commodity currencies will overperform in a weak dollar scenario.
So everyone convert your cash in your checking account to commodity currencies if you're in the U.S.
Right. I said some time ago, Nick, I totally agree with you. We have up 100% confirmation that the move lower in the USD CAD is impulsive. I do believe, of course, that we get some corrections on the way, but I think that there is absolutely no doubt that USD CAD, because people are asking again, I keep telling them not to try to go long, that USD CAD is going to penetrate the 124.23 level we saw as the low in May 2016.
Well, wasn't 116 kind of a long-standing target based upon the first impulsive wave down, like 116, 115?
See, for me, you know the kind of golden ratio thing, a reversal at the 78.6, which the Canadian dollar is on a monthly, means it's always going to go to the 38.2 next in 2 legs. So I really see this as a big ABC and that we're going to come down here to 117.80, and that's like my downside target for.
Let me tell you my
dollar
target.
Canadian.
Just projecting it.
And
My target
that's a
is
bit
at
lower.
around 116 actually.
Yeah.
115.64 is a
115.57.
measured target I have.
Yeah, that's the measured move target. Yes, if we
Yes.
make a big ABC, yeah.
Yes, and
So-
listen to the coincidence. The projection of an ABC from the impulsive move lower we had that started at the beginning of 2016 and bottomed at May, and of the second leg that started just a few months ago in this May, the 61.8 of that projection is exactly the May 2016 low. I mean, they have like, I don't know, 10 pips of difference.
Okay.
So you know, 124.23, 124.20, 15, whatever it is, these two levels, that confluence there is very important. We might see a big rebound from there, get people thinking that this is a double bottom, perhaps even go up to 130, and then roll over and penetrate through the lows again with force. That's what I think, Nick.
You mean like a big flat correction here? Yeah. Okay. Oh, and then lower. Oh no, I see. Yeah, I don't know. I have a feeling that everybody's positioned wrong in the dollar Canadian. So I find it hard to see in this kind of a trend much of a bounce. And whenever it's done it before in the Canadian, when everyone's been positioned wrong, like I remember I was in Canada for 2008 for this rally, and it tends to just keep going and confound everybody. So I don't know.
You know, also people should keep in mind that the first impulsive move, I mean, from the highs at 146.90, yielded, I think, around 15.5 percentage of depreciation for the pair, and we've currently seen, I would guess, around half of that, a little bit more than half of that. So, you know, even if we have, you know, even if we see it that way, especially after some kind of a rebound that we might get up to 128, I think that somebody should expect, you know, at least as much of a move lower to follow.
Oh yeah, yeah, I agree. Yeah, I think I understand. Yeah, I agree with you. Yeah, definitely. So yeah, I'm not tempted to buy it, but this mid pivot that we've broken, like 126 around there, it's not that much higher than here. I think any bounces back into it are really big sell opportunities for me, and that's this big monthly 50% level from the 2001 high to the 2007 low. So,
by the way, I don't know if you're looking at the Aussie Kiwi. I'm asking also a question in regards to what people are saying. I said to people yesterday that a break below the zone of 1075 would make me book profits because I was long actually from the inverted head and shoulders. And I actually did so because I was seeing a descending trend line that rejected us. And personally, the kind of move we had the last couple of days, I don't like. Yep, look at that weekly. Look at that weekly candle, Nick. That's very nasty, right?
Yeah, like this is just such a big mean wedge, and they've been taking turns, you know, the Aussie and the Kiwi, push me, pull you, you know. The Aussie broke out and the Kiwi wouldn't, and everyone was going the other way, and everybody was wrong in the Kiwi, and then it's just been really ugly the way it's been one after another. So yeah, actually, very, very tricky.
We have a very nice triangle here on Aussie against New Zealand dollar.
Yeah. If you're talking about a triangle, Gregor, I'm obviously thinking that you believe that it's going to be resolved to the downside. Am I correct on that?
I do as well. Yeah.
And I think that this spike that you're talking about from this week, it's a wave E, because
so you think that was the last hooray before actually a break lower, right?
Yes, if you count it from 2015 lows.
Yeah.
And I will take this wave A, B, C, D, wave E.
So for people that are asking, Greg and Nick both longer term see this breaking to the downside. And as I said, we took the inverted head and shoulders opportunity, whoever took it. I mean, we saw it in advance before it broke. We tagged the target, we even overshot it, but the price action we see the last couple of days and the weekly candle are very nasty. Especially this weekly candle is, oh my God. I mean, I don't want to be long something that leaves such a weekly candle behind, honestly.
I want to thank the Dream Team. We have another great interview to cap off the week, and this one's for you, Nick. Jeff Cooper.
Yeah, I'm excited. I'm staying for it. I'm really excited.
Jeff Cooper is a GAN practitioner, and what a great week hanging out with all of you guys. Greg and Nick, thanks for coming.
I've read Jeff Cooper's book. He read a book. It's like a Bible book for short-term trading, and it was really good. I really recommend it. Actually, it was one.
Okay. Well, fantastic. So, without further ado, I'm going to make Jeff a panelist, and then I'm going to be showing some things.
Thank you, Greg. Thank you all. Thank you, Dale. Enjoy the interview.
Steve.
All right. Thank you, guys. Okay, so Jeff, I'm making you a panelist. And then I'm going to take control of the screen, so your audio should work here. Presenter. So here we are. Welcome to FACE, Jeff.
Thanks. Can you hear me, Dale?
I can, loud and clear, buddy. So there's your picture. Your reputation precedes you in here. One of our best traders, analysts, Nicola Duke, said she read your book. One of the best. It's a Bible for short-term trading. So you come in as a known entity. You've published many books, and here's some comments that people have made. Jim Cramer said, "Booyah" to you. Hit and run trading. I think that's what Nick was talking about. That's your book there.
Yeah, there are two of them: Hit and Run Trading, and then the sequel, Hit and Run Trading 2.
And you've made some big calls, followed Jeff since 07, and his major contrarian calls have been spot on. And someone remembered March of 09 when everyone else was calling for the end of the world, when the S&Ps were trading at the sign of the beast, 666. Jeff was telling his readers the low was in. So really appreciate someone with your experience and having seen so many market cycles being with us today. You know what I'd like to start with though, Jeff, is from you to get from the beginning to where you are now, an author, a financial commentator, trader. Tell us about the beginning of your career and how you got involved in trading, what it was like for you early on, and
Will do.
how you came to adopt GAN as one of your major tools for predicting markets.
So it's been a long, strange trip, and it's maybe very timely, to coin an expression, it may be very timely that we're doing that this week, which we'll touch on towards the end here. But how I got into this. So I've been a trader since 1982, but prior to that, I was in the skateboard business in its early days. I actually started Dogtown Skates, which some of you may have heard of.
Yeah, I've heard of it, yeah.
Anyway, skateboarding went out of favor in 1980, and I was looking for something. My dad ran a private hedge fund, and he suggested I become a broker to get a little experience. He wasn't going to take me on green. So I was hired by Drexel Burnham in July 1982.
Beverly Hills? The Drexel in Beverly Hills?
Beverly Hills, yep.
I know the office. I knew many guys that probably you worked with back then. Go ahead, buddy.
So, as they say, July 1982, right before the market exploded in August, as they say, timing is everything.
Right.
And a president at Drexel named Dick Haft befriended me. He was a brilliant guy. And he had a way of looking at the market that really merged the left and right brain, art and classic literature and psychology with the market. And Richard used to teach standing room only extension classes on the market at nights at UCLA.
Wow.
I'll never forget him saying to me in July '82, "I'm so bullish my teeth are chattering." Well, the market exploded in August, and I saw that there's something about timing to this game. It's not just earnings and statistics. Half used to love to tell the story in his classes about how he cut his teeth as a value investor when he was a student at Harvard. And he found a company that fit all his criteria. Every semester, he put more and more money into the stock. And for years, the stock flatlined. A few months before graduating, he sold the stock. Shortly there, you know the story is going to go.
Yeah.
Shortly thereafter, it took off.
Right.
He had recognized the value, but it took years for Wall Street to recognize it.
That's one of my shortcomings. That's one of my shortcomings. So, you know, a lot of guys that have a lot of market insights and wisdom are usually early, aren't they?
That's true. I found that to be very true. I know I'm always early. Timing and time, I realized timing, you know, as the years went on, timing and time are everything. That was a big lesson. And that, along with the death and ultimate rebirth of skateboarding, if I'd stayed in it and kept the brand name, you know, who knows where I'd be with coining money from video,
Right.
Dogtown video games or clothing and ancillary type stuff. Anyway, skateboarding and its cycle and Richard Half's story about his value investment were my first introduction to the idea of cycles. Now, let me go a little further. Underpinning my arrival at Drexel and the way I started to look at the market was really my education at NYU, New York University. And I never took an economics course in my life. I didn't study economics there or business courses. I majored in film and literature. I was always very visually orientated.
Right.
I loved film, but I was really always more interested in still photography versus film. My thinking was that still photography captures a moment in time and essence. And I had a natural affinity at the same time for poetry and pursued writing poetry. So I could see that poetry was to long stories and novels as still photography was to film. They are psychological snapshots that are trying to kind of look around the corner like a chart, much like a trader will try to glean the future from the essence of a chart pattern. A little story. I remember being at a meeting with Milton's group. I was a newbie in the summer of 1982, before the market took off, and voicing my bullishness. They said, look, the economy was in the tank, interest rates are sky high. What kind of economics was I basing my bullishness on? Sheepishly, I told them I'd never taken an economics course and said, turn the chart of the Dow upside down. Would you be a buyer or seller? They could see that turning the chart upside down, the index looked like a sell, which, of course, in reality meant that it looked like a good buy.
That is hilarious. You know, when I had a friend, Jeff, that, you know, when I was on the wrong side of the market, he would tell me to turn my chart upside down.
Somebody, it was really Richard Half that suggested that. So, in other words, they could relate to the idea of a fear of heights when they turned the chart of the Dow upside down, and it could the market could die of its own weight, but they couldn't see a catalyst that could propel it out of the quagmire in 1982.
Because they were completely into what the past was going to repeat in the present, and we had been in a bear market range for what, Jeff, about 15 years between 720 and 1,000, something like that. And so most people in the business were used to eroding bear markets. So how could they see the bull coming? Because they, you know, for 20 years, they never saw one.
It's funny, the very first, my very first experience in the market, before I was hired at Drexel, I would go into a Shearson office in Beverly Hills, and there was one broker there.
Bill O'Harma.
What's that? No.
Okay.
I never met him. There was a broker there from Iran that had a lot of rich Iranian, Persian clientele, and you know they love to gamble on the futures. So I decided to, I was very bullish based on what my mentor Richard Haft was saying. I decided to buy some S&P futures, and my very first technical market leader at the time was Stan Weinstein.
Oh yes,
I'm sure you've heard of, the professional tape reader.
It's like a trip down memory. It's like a trip down memory lane with you.
Real, no kidding. So the first 2 weeks, I had made, I think the Dow had gone from like 780 to 830, and I had made, I didn't put a lot of money into it, but I had made $25,000 in that 2 weeks. That was a lot of money back then, especially, for me. And I remember calling Weinstein's hotline. I think his hotline was only every Friday night at the time. And he said, well, we may have a little reaction here. And I said, oh, a little reaction, what's that? Well, the market went back down to 780, and I had a margin call for 15,000 and then another 15,000. So ironically enough, I learned later on that they say, if your first experience in futures is a losing one, count your lucky stars. And that was a really good lesson. But anyway, I hated the sell side at Drexel and soon left and went to work for my dad. He was a great tape reader. He knew absolutely nothing about technical analysis or charting. What my dad did drill into me was an important lesson that stocks don't move, they are moved. And it really made no sense to me that stocks got revalued from day to day and week to week in major ways. To me, it was obvious the game was more art than science. I could see that patterns of accumulation occurred before a stock was quote unquote released and driven higher, and vice versa, that patterns of distribution played out before a stock was driven lower. So I came to the conclusion that since fundamentals didn't satisfactorily account for the volatility and continuous short-term repricing swings in stocks, I was kind of drawn to the idea that the market was more, as I said, more art than science, and more of a psychological than a logical game where perceptions were reality. And we all know perceptions change like the wind. So the last part of this journey is how I got into GAN is kind of fascinating. In the mid-1980s, every Saturday, IBD, Investors Business Daily, they had a shop down in West LA, and every Saturday morning they had the new chart books came out with the updated prices.
Right.
And I used
to you didn't use commodity perspective. You used IBD chart.
I used IBD, correct. Okay. And I used to drive over there and buy these charts every weekend. And they also sold books on the market. I read everything I could. One week I stopped in there and they discontinued selling books. And they were my source. There was no Amazon. I asked if they knew where I could buy books on the market, and they recommended a ramshackle little bookshop upstairs from an auto body shop. I go over there that same afternoon. I couldn't believe it. I couldn't believe what they were sending me. And in the interim here, a broker had mentioned, I never heard the name W.D. Gann before, and he had mentioned the name to me and how square numbers affect the price of a stock. He said it's simple. Stock stops at 6 squared and 7 squared. Well, we all know it's not that easy.
Right.
So the first visit to that small bookshop was the beginning of an adventure studying the idiosyncrasies and synchronicities of the market. I walk in and I asked the owner of the store if he'd ever heard of W.D. Gann and the squaring of prices and if he had any books. His partner laughed. I was embarrassed. I said, what's so funny? And the partner went on to say, you're talking to the expert in GAN. The guy's name was Jerry Baumering. I learned that this fellow used to be a professor at physics at USC, and he taught a course that met once a month for 12 months. I took the course, but unfortunately he died halfway through. But it did introduce me to the geometry of the markets and the belief that, as Carl Jung said, in all chaos, there is a cosmos, in all disorder, a secret order. So let's take a look at what I'm talking about and some of the slides.
Let me go to the GAN wheel first. What do you think?
Yeah,
Here
well,
we
go
are.
to the GAN. Well, let's go to the Tesla first. Here you go. That's the
Okay,
Dow. Let's go to the Tesla first if we can, Dale.
Okay, now the Tesla, I had up here somewhere.
I think this is it right there. You go.
That's the S&P.
Go back
This
one.
is it. This is it. I couldn't get there because I didn't have a login for the Tesla report.
No,
This
you
is
just
what I
showed.
got
You just
for
showed
the-
it. Go back one. I think you can grab it. It's right here in the bottom, right there.
This?
Yeah,
Okay. Show
That's-
slideshow.
you got it.
Okay.
So in March this year, Tesla made a low after the market corrected at 243 and started turning up again. And in May, I projected that it would go to 384. And it's hard to see on these numbers, but 243 is here. These are all
Yeah.
squares. This is the square of 9 number grid with the dates of the year surrounding it. And usually stocks or indices, any tradable item, will work out in decrements of 90, 180, 270, and 360 degrees. That doesn't mean that obviously stocks can go up 5-fold and 10-fold, and the S&P has gone from 666 to 2,400. But it's the behavior once they've gone 360 degrees or down 360 degrees or 180 degrees. It's the behavior that tells the tale. So Tesla, anyway, it bottomed at 243, and on the chart, it had broken out above 309, and I made a projection in May that would probably tag 384, which is 2 complete revolutions or 2 of these whole squares. So this is a big square here. 2 of these squares up, 2 rungs up from 243 ties to 384. So in June, Tesla hit 386, and I got a couple of emails. People want, people want this to be a science, and they go, what do you say now? Tesla just cut through 384 like a knife through cheesecake. I said, first of all, the expression is a knife through butter. And second of all, 2 points on a $380 stock is not.
Yeah, can you clean it up a little bit, Jeff? I mean, to be we hear this too. Oh, you called an area and it went through it by a few pips. So
yeah, a few pips. So anyway, the rest is, as they say, is history. Tesla closed that day at, I think, 383.50 or so. And in 8 days, it was back to the low 300s.
Nice. Beautiful.
So Gann used to say that all major highs and lows are harmonics of prior highs and lows. And this is according and in keeping with what he called his law of vibration. So they're harmonics of each other and they relate. And if you want to go to the next slide on the square of 9 on the S&P, show you something that's really timely and I think fascinating. Let me show you an example of how, go back one.
Oh.
You had it up there. There you go.
Okay.
So let's take a look here at how the high in 1929, which was 386, that's right here.
Oh, I see it.
Okay, 386 right here.
Right.
Ties to the crash in 1987 and to the orthodox or primary high in July, in fact, July 1920 at 2007. The market made a high in July 2007, tumbled, and miraculously, all of the Fed, walked back up to make a marginal new high by, I think, around 20 points into October. 90 degrees past the October high. So what's interesting is that the Dow high in 1929 was 386 and aligns with this date, July 20th. So that's why Gann's book is called Tunnel Through the Air, because these price and time vibrations go forwards and backwards. Prior important major highs and lows relate to future highs and lows. And you can see that 386 is 90 degrees. This is a 90-degree angle here. Square October 19th, which is the date of the crash, of course, in 1987.
Nice.
So what I didn't want to put too many lines on this, but if you move it up back just a little, move it up so you can see the top of the chart, the top of the wheel. Here you go, great. In 2002, the S&P low, I'm trying to see it here, is, here we go, 786, right here, which also ties to early July, ties to the month of July. The idea is that time points to price and price points to time. Time and price marry each other. You get what Gann called a balancing out or a squaring out of time and price. So 90 degrees square 768 was early October, and that's where the 2002 bottom was, right at 768 on October 9th in 2002. And what's fascinating is that 5 years later, in 2007, 6 rungs up from 768. I know it's very hard to see this on here, but I do offer this wheel for sale, and it's much more important. And I know there's some digital versions of this wheel, but it's much more important. Just like you know, Gann used to draw. Of course, they didn't have computers at the time, but Gann used to draw his charts by hand. And one of my heroes in technical analysis, Justin Mamus, always drew his charts out by hand, because just the feel of watching.
NLP. It's NLP. Anything that you put on paper leaves a bigger impression in your mind.
It really becomes something indelible.
Right.
Anyway, so 6 rungs up, or 6 full revolutions of 360 degrees, was 1576. And I don't want to get too esoteric, but that's when it occurred to me, Gann, you know, he always used the word square outs. He never used the word cube. But one of the courses and DVDs I did, I think 2005, was a study of all the swings in the S&P from 1941. And in doing so, I noticed how many 540-degree swings there were in both time and price. I said, well, what is this 540 degrees? And I realized, well, in a true square is a cube, there are 6 angles of 90 degrees. 90 times 6, 540. So a cube. So I reckoned that 6 full cubes of 360 degrees up from 768 to 1576 could be an important top. And sure enough, 1576 was the high in 2007. So when you see this geometry work, despite, you know, hundreds of thousands of traders and billions of dollars, that there's some kind of innate underlying natural law that may be at work here, it really becomes something fascinating to me.
You know what, Jeff? You know what's fascinating is all the different historical eras all these turns came at, you know, from the day, you know, when Gann was trading, you know, he was doing it off a tape like your dad, only your dad's was electronic. And then, you know, we always had open outcry, and then that went away. And they say the market's changed because, you know, now we have algos and black boxes and all of this type of real high-speed trading, and yet this transcends all the changes in the market's nature, even its physical structure of executing prices, which is, to me, fascinating.
Well, that's the thing. Ultimately, we're going to get to see who's bigger, Janet Yellen or Mother Nature.
Great one. Yeah.
You know.
Okay.
So
So you want to go?
Go ahead, Dale.
You want to go to that slide?
Sure. Let's go to that.
It's the first
To the there we go. So let's look at a way of what we're looking at now in the market. This is an S&P weekly from June that I did for my my report for subscribers. Let's look at the symmetry. The bear market from 07 to 09 was 910 points. That was the range of the bear. Added to the 1576 top from 207 is 2486. We just hit 2478 yesterday. We also have a measured move from the 1810, the last major swing low that creates a trend line here, from 1810 to the I think it's the 2194 top in 2016 is 384 points. It was just yesterday or last night when I was looking at this chart again for you that kind of popped out that, well, that 384 points is awfully familiar. It kind of rhymed with the 386 points of the Dow high in 29. But anyway, so you have a measured move here from 384 points up to 2194, and then to the pre-election low for the Trump rally at 2084 S&P, another 384 points ties to 2468.
Yeah. Did Carl Icahn, was he getting your letter when he left the victory party and went and bought futures limit down that night?
Well, if he is, he's not paying for it.
Great one, man.
So go back. I'll show you one last thing here, which ties to this 2480, 2470, 24. You can go back to that square 9 that related to on the market on the to the other one. You got it. So again, I'm sorry, this is we can't blow this up, but 666. Let me try to find it right here. Is right here. Okay. You got it. 666 is, here's 660. Trying to find it here. 845. Here we go. 666, 667. Now, I didn't draw this relationship, but if you were to do the same thing I did on the left of the chart, 386 being square October 19th, 666 is 90 degrees square March 6th. So in other words, I take a line down from the center through 666 and a right angle, and it hits March 6th. So this is a little too much to be happenstance. The same way that the S&P found low in 2002, a la 768 squaring early October, and the 07 high with 1576 squaring early October showed up again at the 09 low with March 6th squaring 666. Now, I thought it was a low, and I said so in the report, but honestly, I thought it was probably a low for maybe 6 months, that we were going to repeat the 6-month rally after the 29 crash because it was such a disaster.
Right.
And the moral of the story is, when the market starts behaving differently, you want to listen. It rallied for more than 6 months. But what's really interesting here, where we are at this point in time, and my physical square of 9 wheel goes up to the 3000s. This digital one only goes up to to below 2,000. But anyway, trust me when I say that 6 squares up from 666, 6 of these rungs up, ties to 1430. So we got to 1430, I think, in 2012, again, coming up off the low. And I said, oh, great, this is going to be a short, thinking the same thing was going to happen when we ran up 6 squares from the 02 low into 07.
Right.
And the market reacted a little, but ultimately blew through 1430 and kept going. And if you look at your charts, we had a persistent run once the S&P recaptured 1430 up to, yeah, you can see here's around 1430 right here. And you had a really persistent, clean bull run. And then it occurred to me a couple of years ago that I had been looking at it as backwards. In other words, 1430, which is right here, was the pre-crash pivot high in 08. And so what did the market do? It waterfalled 6 squares, just like it had gone up 6 squares and from 202 to 207. It waterfalled 6 squares down from 1430 to 666. It had been there, done that. So the moral to the story is that what's 6 squares up now from 1430? It's 2480. Yesterday, the Dow hit 2478. So it's going to be really interesting to see what happens here.
Let me ask you this, Jeff. If this turns out to be a major turning point based on your work, what would be the minimum severity of the decline, especially if we break the trend line and you get confirmation of the uptrend being broken? Because to me, it looks like a huge rising wedge.
Right.
Which, you know, wedges, like the rule is that I learned from Edwards and McGee, and I'm sure you read that book back then too, is 100%. That wedges retrace 100%. But what would be like a minimum expectation if we roll over from these Gann numbers that you're talking about now?
Well, not even using the Gann wheel, I would say that in a bull market, you could certainly want to look at 360 degrees down. But given that we haven't had a 20% correction in 6 years, right, you know, that seems like it would be on the table. But let's assume that this was a daily chart, not even a weekly chart. And it was a daily chart encompassing, you know, a couple of years maybe.
Right.
And even in a normal bullish correction, a pullback to these prior highs arguably would be, you know, presumptively that would, say again?
These right here, yes. 2134?
Yeah,
about
in the 2100s, okay. Exactly. Would be the normal expectation, even okay, within the context of a bull market. One could say that even a pullback, if this was now a daily chart of a stock, let's say it was
1810.
Well, I'm talking about over a year to the prior highs of 1576 would even be doable. The problem,
and you know what? I think that's 38% back of the whole advance, or halfway back.
And they say that that's a normal retracement. The problem is that if you break this rising 3-point trend line from 09 and February 2016, and then the pre-election lows, you're going to break a 3-point trend line for what I call a rule of 4 sell, and those usually give you fast moves. So I would expect that if you break 2280-ish, which is where this number ties right here,
right,
that the normal expectation would be certainly a test of the low 1800s.
What a great interview, Jeff.
I appreciate it.
Did you enjoy it? I know I did. I know our community did, and your explanations are clear as a bell. And what an interesting journey you've had, and how blessed you were to have a dad to be your mentor instead of what people have to go through nowadays on the internet.
That's very true. Yeah,
with all the charlatans out there and everything. So, you know, I'm happy to call you if you accept my Trading Warrior brother, and I hope all your forecasts come true. And I recommend people follow you at the minimum on Twitter and perhaps subscribe. You have some deals. I think I was showing some of the deals that you have here.
T3live.com.
Yeah.
They publish my report. Let me just add one thing before we hop, if I may.
Go ahead, buddy.
The square of 9 wheel, took me years to fabricate, and I do offer it for sale. And of course, it comes along with the consultation, phone consultation on how to use. But for those of you who are really GAN students and aficionados, the square of 9 wheel does a great job of unlocking the codes to Gann's master time factor, which are in his novel, The Tunnel Through the Air. So any of those of you that are interested in exploring that further, contact me at jeffreycooper@earthlink.net, and we can get into a dialogue about it and how to obtain the square 9 wheel.
Have a great weekend, Jeffrey. Thank you
Thanks
so much. That's my middle name, Jeff. So enjoy your weekend in paradise. Jeff lives in one of the coolest places in California. So pleasure meeting you, Jeff. I'm glad to know you.
Likewise. Let's stay in touch.
Okay, everyone, that was Jeff Cooper. You could follow him at Jeff Cooper Live. You could email him at his Earthlink address. And there's a veteran, okay? I want to thank everyone for their hard work. Hope everyone had a good week. And enjoy your weekend. See everyone on Monday, God willing. And remember, most of all, don't just count your pips, count your blessings. And I'll see everyone Monday. Adios. See you guys.